Now we are going to discuss the questions relating to accounting standard 7, sir. So first illustrations from the Icai study material, sir. One by one illustration we will see. So carefully observe. Illustration number 1, sir. XYZ Construction Limited, a construction company, undertakes the construction of an industrial complex. It has separate proposals. See, separate proposals raised for each unit to be constructed in the industrial complex. Since each unit is subject to separate negotiation, he is able to identify the cost and revenues attributable to each unit. Should XYZ Limited treat construction of each unit as a separate construction contract according to A7? Tell me, first of all, after reading this question, what is your impression? Which concept this question belongs? This question belongs to segmenting, combining and segmenting concept. Segmenting. Single contract with multiple assets. Then construction of each asset is treated as a separate contract. In this case, XYZ Construction Limited, a construction company, so entered a single contract for construction of industrial complex. Now in this construction of industrial complex, multiple assets are involved. Now see, three conditions to become each asset as a separate contract in a single contract. First thing is that separate proposals must be submitted for each asset. So separate proposals. And then separate negotiations must happen. Separate negotiations are there for each unit in the industrial complex. That is, each unit means each asset. And third, cost and revenue should be identified separately for each asset. Cost and revenues attributable to each unit you are able to identify. That means all the three conditions are satisfied. Then we can treat each unit as a separate contract. This is called segmenting, and the company is correct. Whether XYZ Limited can treat each unit as a separate contract according to A7? Yes, they can, because all the three conditions are satisfied. So as per A7, construction contracts, when contract covers number of assets, the construction of each asset should be treated as a separate construction contract. When separate proposals submitted for each asset is subjected to separate negotiation, and the contractor and customer is able to accept or reject that part of the contract relating to each asset, and the cost and revenue of each asset can be identified. Therefore, XYZ Limited is required to treat construction of each unit as a separate construction contract. So this is question number 1. Very simple. Once you know the concept, just an application. Now illustration number 2, sir. See this question carefully. Very big question. So we will solve this question. AB contractors enter into contract on January 1st, 2011 with XY to construct a 5-stored building. Okay. AB contractors entered a contract with XY to construct one 5-stored building. Under the contract, AB is required to complete the construction in 3 years. Okay. That is by 31st December 2013. The following information is relevant. First, fixed price 5 crores. What is this? Initially agreed price 5 crores. Material cost escalation. So there is an escalation clause which says material cost escalation to the extent of 20% increase in material cost. 20% of increase in material cost. Most of the students, sir, will confuse here. You have to understand properly. So carefully understand. I told you. Actually, this question is relating to contract revenue, sir. In the concept of contract revenue, sir, contract revenue may subject to changes. Initially agreed price may change because of the 5 reasons. Variations due to escalation clause, claims, incentives, penalties. 5 reasons. Now, First, they are talking about escalation clause. Material cost escalation to the extent of, see here, to the extent of 20% of increase in material cost you have to take. Okay. Labor cost escalation up to 30% of increase in minimum wages. Up to 30%. So there is a difference, sir. To the extent of 20% of increase in material cost, labor cost escalation up to 30% of increase in minimum wages. Okay. In case AB is able to complete the construction in less than 2 years and 10 months. Actually, originally contract has to be completed by 3 years, right? If they are able to complete the construction in less than 2 years and 10 months, it will be entitled for an additional incentive of 50 lakhs. Incentives, 50 lakhs. Incentives can be added to the contract revenue, provided two conditions. What is that? Contract must be sufficiently advanced and it is probable that specific performance conditions will be met and the amount is measured reliably. The incentive is 50 lakhs. However, in case the contract construction is delayed beyond 3 years and 2 months, XY will charge a penalty of 20 lakhs. This point also I told you, penalty. From the contractor side, if there is a delay, he has to pay the penalty. Now here, if the contract is delayed beyond 3 years and 2 months, contractor has to make the payment of penalty, which will reduce as the contract revenue. At the start of the contract, AB has a reason to believe that construction is completed in 2 years and 8 months. Assume that the construction was actually completed 2 years 9 months. Actually, construction was completed 2 years 9 months, sir. Actually, what is the deadline, sir? If it is constructed less than 2 years 10 months, then you will get incentive. Here we completed 2 years 9 months only. Therefore, contractor is eligible for incentive. Therefore, this 50 lakhs will be added to the contract revenue. Contract sufficiently reached advanced stage and it is probable that he is going to meet the condition. Actually, he meet the condition. Amount is measured reliably. Next. Now, the important point. See this. Labor cost was originally estimated to be 1.2 lakhs. Labor cost originally 1.2 based on initial minimum wages. Okay. However, the cost have been increased by 25% during the construction period. There, the labor cost estimated, originally we estimated 1.2 originally based on the minimum wages. But because of the escalation, the cost have increased by 25% during the construction period. So, we estimated 1.2 as a contractor and accordingly I fixed the contract price. But in future, the cost may increase now. So, labor cost increased by 25% during the construction period. Okay. Next, material cost have increased by 40% due to short supply. The material cost increased by 40%, sir. Okay. The total increase in material cost due to the 40% escalation is 80 lakhs. Now very, very important, sir. So, relating to labor, sir, they have given estimated labor cost 1.2, but the labor cost have been increased by 25% during the construction period. And relating to the materials, they have given directly, they are saying that 40% increase in material cost. And what is the amount in terms, what is the amount for this 40% increase? 80 lakhs. Now what they are asking, you are required to suggest what would be the contract revenue in the above case. So what is the contract revenue in the above case? Okay. Assume that in the year 2012, XY has requested AB to increase the scope of the contract. Okay. An additional floor is required to be constructed and there is an increase in the contract fees by 1 crore. AB has incurred a cost of 20 lakhs for getting the local authority approval, which it will be entitled to claim from the XY in addition to the increase in the fixed fees. Also measure the total contract revenue in this case. Actually, there are two questions they are asking, sir. First, till here we see. You are required to suggest what should be the contract revenue in the above case. First of all, what is this question is relating to contract revenue. Can you tell me how to measure contract revenue? Initial agreed price, add or less variations, add or less increase or decrease due to escalation, add claims, less add incentives, less penalty. Correct? These things we discussed in the standard. Now try to apply here. So this is illustration number 2. See here. So we are deciding contract revenue, sir. So determination of contract revenue. First, initial agreed amount. What is the initial agreed amount between the parties? 5 crores, sir. 5 CR. 5 CR, sir. Rupees in crores. Okay. Now next, what happened? Is there any variations in the contract? Till here, this question. No variations, sir. Okay. Next. Is there any increase or decrease due to escalation clause? Yes. Yes. If you see first the material cost escalation. In the agreement they have given material cost escalation, we need to consider to the extent of 20% of increase in material cost. Actually in the question, if you read carefully, sir, I want every one of you to concentrate here. If you read the question carefully, they have given in the question that material cost have been increased by 40% due to short supply. But as per the agreement, we have written we will consider only to the extent of 20% of increase in material cost escalation. Sir, what is this, sir? See, suppose customer and contractor entering an agreement. See, they say in future the cost may increase. Okay, we will add escalation clause. Whatever the cost increase, you have to pay to me. As a customer, you have to pay to me. Like that, the contractor will think. But customer may ask the contractor that, sir, you put a tap, because suppose the cost may become double, triple, 4, 5 times. Then how can I bear as a contractee? So you put a limit. So that's why sometimes in the for this escalation clause also, they will put a limit. That is here, material cost escalation to the extent of 20% of increase in material cost we have to consider. Now that means material cost increased by 40% due to short supply, but we need to consider only 20% increase in the material cost. Now for 40%, there is an increase of 80 lakhs. See, you have to interpret properly for 80 lakhs. For 20%, if suppose for example there is 20% increase in the material cost, what would be the increase in terms of amount due to escalation? Exactly half, 40 lakhs. Na? Because for 40% increase, the total increase in the material cost due to the 40% escalation is 80 lakhs. But as per the agreement, we need to consider only to the extent of 20% of increase in the material cost. So if there is a 20% increase in the material cost, we need to consider exactly half. So therefore, here add material cost escalation. How much we need to consider material cost escalation, sir? 0.4 crores, because 40 lakhs we need to consider. Have you understood, sir, why I have considered 40 lakhs? Because how much material cost increased, sir? 80 lakhs, 40% increase. But in the clause they clearly said to the extent of 20% of increase in material cost only we need to consider. Here students will misinterpret this. 20% of increase in material cost. Material cost increased by 80 lakhs. So 80 lakhs into 20%, I will take 16 lakhs, which is not correct. Why? Because you need to interpret correctly. They are telling to the extent of 20% increase in material cost. So if there is an increase in material cost by 40%, 80 lakhs cost increased. Now suppose if this increase is only 20%, then it will be half exactly. It is not 20% of 80 lakhs. 40% increase 80 lakhs, 20% how much? That is how you need to interpret. Next, Coming to the labor, sir. Labor cost was originally estimated how much, sir? 1.2 crores. However, the cost have been increased by how much, sir? 25% during the construction period. Okay. We estimated 1.2 crores and it is increased by 25%. And relating to labor cost, they are saying that up to 30% of increase in minimum wages. Actually, if you see, add labor cost escalation. They have written in the agreement that labor cost have to be considered at up to 30% of increase in minimum wages. Minimum wages increased by 25%. And the minimum wages they have estimated 1.2. So 1.2 CR into 25% increase. So 1.2 into 25%, 0.3 crores we need to take. 0.3 crores we need to take. Sir, here they said up to 30% of increase in minimum wages. See, even though the clause has given the maximum limit 30% of increase in minimum wages, but there is an increase of only 25%. So we will take the actual or the tap maximum, whichever is lower. So the actual increase is only 25%. Na? So therefore 1.2 crores into 25%. How much? 0.3 crores increased. I think these two are very, very important things you need to understand. So please understand, Nana, escalation means here in this case increase in material cost, increase in labor cost. But they have given the limits. Material cost you should consider 20% increase. Labor up to 30%. So they have given there is a 40% increase in the material cost. But if it is 20%, how much it is? Exactly half, 40. So therefore 0.4. Labor cost, actually 25% increase in the labor cost. So 1.2 crores into 25%, 0.3 crores. And we can take up to 30%, but the increase is only 25%. So therefore we consider the actual increase. Okay, you can't say to the customer that, see, we have in the agreement, we have written up to 30% of increase in minimum wages. So I will take 30%. No, actual increase is only 25%. So only 25% will be collected from the customer. Please understand. Okay. Now, apart from this, any claims? Nothing. But there is incentives, right? Incentive. How much is the incentive, sir? 50 lakhs. So 0.5. So I think all that's it. Any penalty here? No penalty, because we completed the contract in time. That's it. So therefore, what is the contract revenue? 5 plus 0.4 plus 0.3 plus 0.5. It will be 6.2 crores, sir. 6.2 crores is the revenue for the first case. 6.2 crores. See this. Fixed price 5. Incentive for early completion, we will add. Material cost recovery to the extent of 20%. 0.4. Labor cost recovery, actual increase is less than 30%. So we will take the actual increase. Okay. Suppose if the labor cost is increased by more than 30%, then you will take up to 30%. Okay. So there is a wording. Here, when it comes to the material, you take to the extent of 20% increase in material cost. This is not 20% of increase in material cost. If the material cost is increased by 20%, then what will be the increase in the cost? They have given for 40% 80 lakhs. For 20% exactly half, 40 lakhs we need to consider. So look at observe the difference between the wordings. Okay. Now second bit, come to the second bit. Assume that in year 2012, XY has requested AB to increase the scope of the contract. Okay. An additional floor is required to be constructed and there is an increase in the contract fees by 1 crore. Okay. Additional floor requested by the customer. 1 crore is the fees. Contract revenue is increased by 1 crore. AB has incurred a cost of 20 lakhs for getting the local authority approval, for which it will be entitled to claim from XY in addition to increase in fixed fees. Sir, what is this? This is a claim amount. I told you, claim amount is the amount which is claimed, which is seek to collect by the contractor from contractee for the cost which is not specified in the agreement. Now here in this case, if you see AB, the contractor has incurred a cost of 20 lakhs for getting the local authority approval for the construction. So which he entitled to claim from XY. So therefore here, second bit answer, add additional revenue, additional contract revenue of 1 crore, 1 CR, and also one more thing is that claims. So there is a claim amount. What is the claim amount here? 20 lakhs. That is 0.2. That's it. So 6.2 plus 1 plus 0.2. So 6.2 plus 1 plus 0.2 will be 7.4 crores. This is the contract revenue for the second bit, 7.4. So we add the variations, we add the claim. Now because of the variation, the additional revenue 1 crore we should add, and there is a claim by the contractor from contracting, 0.2. So this is the question relating to contract revenue, sir. I request every one of you to carefully read this question, because this question, the escalation clause, you have to interpret carefully. The material, the labor escalation, you have to interpret carefully. That is the main thing here. Okay. Now come to question number 3, sir. Illustration 3. XY commenced a construction contract on 1/4/2011. The fixed contract price agreed was 2 lakhs. Okay. The company incurred 81,000 in the year 11-12 for 45% of the work and received 79,000 as progress payments from the customer. The cost incurred in 12-13 was 89,000 to complete the rest of the work. Show the extract of P&L account and customer account for the related years. So carefully observe. So X Limited is a contractor, sir. He started one construction project on 1/4/2011, sir. Now the price for the contract is 2 lakh rupees, sir. Okay, this is contract revenue. Now company incurred 81,000 in the year 11-12, sir. First year 81,000 they spent, and 45% of the work is completed, and received 79,000 as payment from customer, sir. Okay. Second year, sir, 89,000 completed to complete the rest of the work. So show the extract of P&L account and customer account for the related years. Now see this. I told you, in respect of construction contract, how revenue will be recognized. Here the construction period is 2 years, sir. So whether the outcome is estimated reliably or not. If nothing given, sir, always assume the outcome is estimated reliably. If the outcome is estimated reliably, sir, tell me how revenue will be recognized. To the extent of, based on the percentage of completion. In the first year, how much work completed? He has given 45% work completed. So therefore, what is the total contract price? 2 lakhs into 45. So 90,000 is the first year revenue. What is the cost incurred in the first year? 81,000. So take it. So 90,000 minus 81,000. So first year profit is 9,000. Now come to the second year. Second year remaining 55% of the work is completed. So 2 lakhs into 55. So the second year revenue is 1,10,000. Now what is the cost incurred? 89,000 second year. Therefore second year profit is 21,000. Therefore if you see overall, the price, the contract revenue is 2 lakhs and the contract cost is first year 81,000, second year 89,000, total 1,70,000. So 2 lakhs minus 1,70,000, 30,000 is the total profit. So first year 9,000 profit, second year 21,000 profit. So they are asking us to prepare the P&L account. How you are going to prepare the P&L account, sir? P&L account, debit side consisting of cost, credit side consisting of revenue. So revenue minus cost, you will get net profit. That is what we will do. And they are also asking us the customer account, sir. Customer account means debtor account. Contractor point of view, customer is like a debtor. Now first year we spend, we want to receive 45% of the construction price. So that we will write as a due. And how much he paid? First year 79,000. Balance will be carried forward to the next year. Like that. So P&L account, if you prepare, sir, how you are going to prepare the P&L account in this case? Very simple for illustration 3. So P&L account, if I prepare, only extract. Simple, sir. And this P&L account is for the year 2011-12, sir. For 11-12, contract price or contract revenue 2 lakhs into 45%. So 90,000 is the revenue. And what is the contract cost in the first year? 89,000, 81,000, sir. So therefore, what is the net profit, sir? 9,000 in the first year. This is first year, sir. Now coming into the second year P&L account, sir. 2012-13. So if you prepare the P&L account for the second year, contract revenue for the second year is remaining amount, that is 1,10,000. Right? That is 2 lakhs into 55%. And what is the cost you are incurred in the second year? 89,000. So 1,10,000 minus 89,000, then you will get a net profit of 21,000. That's it. So this is how we prepare the P&L account. So first year 9,000 rupees in 1,000, second year 21,000. Now customer account if I prepare, sir, customer account, contractor books, customer account if I prepare, now very simple, sir. 2011-12 customer account if I prepare, sir, how much amount is due from the customer, sir? So to contract revenue, first year we need to receive 89. How much we received from him? First year we have received, I think 79,000, given 79. So what is the balance to be carried forward? Balance carried down 11,000. So this is first year, sir, 90. Now coming into the next year, to balance brought down 11,000, sir. 11,000. Now what is my revenue for the second year from the customer? 1,10,000 due. Whenever amount due from the customer account is debited by bank. Rest of the amount is paid by the customer in the second year. That is 1,21,000. Therefore, customer account is closed. So this is how normal debtor account only, sir. Normal debtor account only you need to prepare. Very simple. This is question number 3, sir. You see the customer account. First year 90,000 due, 79,000 paid, 11,000 balance. Opening balance 11,000. Second year due 1,10,000. Total 1,21,000 paid. Okay. Next, come to illustration number 4, sir. PQ and associates undertake a construction contract, the details of which are provided as below. Total contract value 40 lakhs, contract revenue nothing but. Cost incurred to date 3 lakhs. Estimated future cost of completion 30 lakhs. Work completed 10%. Okay. The work has started some time ago. And there is uncertainty with respect to the outcome of the contract due to expected change in the regulations. PQ is certain that it would be able to recover the cost incurred to date. If you remember my discussion relating to recognition of contract revenue, I told you there are two situations, whether the outcome is estimated reliably or not. Here in this case, whether the outcome of this construction contract is estimated reliably or not, tell me. Whether the outcome is estimated reliably or not. In the question itself, they said there is uncertainty with respect to the outcome of the contract due to the unexpected changes. Therefore, when the outcome is not, when the outcome is not estimated reliably, then what is the way to recognize contract revenue? I told you, recognize the contract revenue to the extent of contract cost, provided the recovery is probable. Here in this case, what is the contract cost incurred? 3 lakhs. So you recognize the revenue to the extent of 3 lakhs only, provided the recovery is probable. In the question clearly saying PQ is certain that it is able to recover the cost incurred till date. That means this 3 lakhs, there is a probability of recovery. So therefore, we can recognize revenue to the extent of 3 lakhs. See here. And contract cost 3 lakhs. So therefore, profit or loss 0. I told you, in case outcome is not estimated reliably, you will get either nil profit or loss. Because you recognize revenue to the extent of cost incurred. Therefore, no profit, no loss. Or you don't recognize revenue itself. That means there is only cost. So therefore, in the given case, revenues and cost can only be recognized to the extent of cost incurred and those which are expected to be recovered. Therefore, the profit and loss account should be appeared as under. Contract revenue 3 lakhs. Cost 3 lakhs. Profit or loss 0. So when the uncertainties that prevented the outcome of the contract being estimated reliably cease to exist, revenue and expenses associated with the construction contract should be recognized by the percentage of completion. As long as there is an outcome, there is uncertainty regarding the outcome, then you follow this method. Once the outcome, uncertainties have been done, now if there is a certainty, you can estimate the outcome reliably, then you normally by follow percentage of completion method to recognize the revenue. See how easy this question is if you know the concept. So understand the importance of listening to the standard principles first. So first there is a way. First understand the provisions of the standard, then apply them. Then problems will be easy. Without knowing the provisions, if you... Now the next question for discussion is illustration number 5, sir. In accounting standard 7. See this illustration, sir. Show profit and loss account extract in the books of a contractor in respect of the following data for the year 1. So they are asking P&L account extract, sir, in the books of contractor in respect of the following data for year 1. So relating to the contract, the data is given, sir. Information for year 1, rupees in 1000, sir. Contract price fixed 600, that means 6 lakhs. Cost incurred to date 3,90,000. The estimated cost to complete 2,60,000. Assume that the contract period is 2 years. It's a 2 years contract, sir. The contract is 100% completed by year 2. Actual cost incurred is the same as the total estimated cost to complete. Okay. Cost incurred to date plus estimated cost to complete. Okay. So whatever we are estimating, 260 lakhs, the same cost was incurred in the year 2. Now this question is very good question, actually very important question. Now see this, what is the requirement of this question? They are asking us to prepare the P&L account extract. Now as a contractor, I need to prepare contract P&L account to ascertain the contract profit or loss. Now how I am going to recognize the contract revenue and contract cost? I told you whether the outcome of the contract is estimated reliably or not. If the outcome is estimated reliably, then percentage of completion method. Otherwise, recognize the revenue to the extent of cost incurred. In this case, sir, the outcome is estimated reliably because all the information is given in the question. If the question not specifying anything, then we say outcome is estimated reliably. If the case is outcome is not estimated reliably, like illustration number 4, they will specify in the question. So here in this case, the outcome is estimated reliably. Since the outcome is estimated reliably, we need to recognize revenue to the extent of percentage of completion, to the extent of the contract completed. Okay. And also there is important point, sir. If there is an expected loss, that has to be recognized immediately as per accounting standard 7. Okay. Now how to proceed here? Say this. So illustration number 5, sir. We need to prepare P&L account extract for year 1. So generally in P&L account, we recognize revenues and expenses. First, contract revenue, sir. What is the total revenue, sir? 6 lakhs. But how much will be recognized in the first year? That depends on percentage of completion. So always, sir, find out percentage of completion. How to find out percentage of completion, sir? Based on cost incurred. What is the cost incurred so far? 3,90,000 divided by 3,90,000 plus what is the estimated cost to be incurred? 2,60,000 into 100. So 3,90,000 divided by 60% contract completed, sir. 3,90,000 divided by total estimated cost 6.5 lakhs. So 60% contract is completed, sir. That means contract revenue to be recognized. What is the contract revenue to be recognized, sir? Total contract revenue 6 lakhs. Contract is completed 60%. So therefore 6 lakhs into 60%, it will be rupees 3,60,000. This is the revenue to be recognized. 3,60,000. So in P&L account, we will recognize 3,60,000. Okay. Now next, sir. What is the total contract cost we incurred during the year, sir? Incurred to date 3,90,000. So contract cost 3,90,000 we incurred, sir. Even if you see total 6,50,000, sir, in 6,50,000, 60% completed. It is 3,90,000 only. So contract cost 3,90,000, contract revenue 3,60,000. Okay. Now the important thing, sir, important thing is, here, what is the current year loss? Can you tell me? My current year revenue 3.6 lakhs, my current year cost 3,90,000, so my current year loss is 30,000. So can I write my net loss as 30,000? Now before writing this net loss, sir, you have to check one more important point, sir. In every question, whenever you are recognizing the revenue, whenever you want to prepare the P&L account of the contract, so please be careful. What you need to check is, you need to find out what is the situation overall. The overall situation is, the total contract revenue is 600, sir. That means 6 lakhs. Cost incurred 390, to be incurred 260. That means 6.5 lakhs. That means overall, what is the position of the contract? Loss. Because the total revenue 6 lakhs, the total estimated cost 6.5 lakhs. Already 390 we incurred, to be incurred 260. That means 6.5 lakhs we need to spend. Total estimated cost. So 3.6, total 6.5 lakhs is the total cost as of now. So therefore, what will be the position here? If you observe carefully, sir, in this case, total contract revenue, total contract revenue is 6 lakhs, sir. What is the total contract cost? Total contract means, cost means incurred 3,90,000 plus to be incurred 2,60,000. So total 6,50,000 total contract cost. That means 50,000 is the loss. Agreed or not? You check it, everybody. Overall position this is. Now what is accounting standard 7 says? I will show you what we have discussed in accounting standard 7. In accounting standard 7, sir, if you remember what we have discussed, see here, an expected loss, see this point I told you, an expected loss on the construction contract should be recognized as an expense immediately. Expected loss. So see here, this is expected loss, also known as total foreseeable loss. Foreseeable means expected loss. Total foreseeable loss 50,000. That means the total expected loss is 50,000 as of now at the end of the first year. Correct or not? Agreed or not? Tell me. Total expected loss is 50,000. Because overall, if you see at the end of the first year, the total contract revenue 6 lakhs only. My cost is 6,50,000, my estimated cost. That means I am on the loss. So this is my total foreseeable loss. Total foreseeable loss. Nothing but my expected loss. So standard says whenever there is an expected loss, you need to recognize as an expense immediately. So therefore, this total foreseeable loss recognized as an expense immediately. As an expense immediately. That means this loss of 50,000 shall be recognized in the books by the contractor. Okay. Now the question is, the point is, this 50,000 is the total expected loss. We need to recognize as an expense immediately as per accounting standard 7, right? As per accounting standard 7. But see, out of this 50,000, sir, out of this 50,000, what is my current year loss? Current year loss is 30,000, sir. Therefore, what is the balance? 20,000. Now, this is the expected loss for which provision is required. Expected loss or expected loss for which provision required. Expected loss for which provision required is 20,000. Sir, can you tell me what is this provision is all about? Simple, sir. What is your total expected loss at the end of the first year? 50,000. Now standard says this 50,000 immediately you have to recognize. But see, already in the P&L account we have recognized current year cost 3,90,000, current year revenue 3,60,000. That means 30,000 net loss already we recognized automatically. See, my contract cost 3,90,000, sir. My contract revenue 3,60,000, sir. 30,000 already loss recognized, na, sir. Therefore, out of 50,000, what is the balance expected loss for which that I need to recognize? 20,000. Now, what I will do is I will create a provision. I will create a provision for this loss in the current year itself, because standard says expected loss has to be recognized immediately. What is expected loss here? 50,000. This entire 50,000 has to be recognized in the first year itself. Sir, in this 50,000, sir, current year loss 30 only. Future loss 20. But that has to be recognized in the current year itself. So therefore, 30,000 already you recognized, sir. How? Contract cost 3,90,000 you recognized. Contract revenue 3,60,000. That means 30,000 already recognized. Na? So what is the balance expected loss we need to recognize? 20,000. Now for that what we do? We create a provision. So therefore to provision for loss. Provision for expected loss 20,000 or provision for loss. And what will be my total loss? Net loss 50,000. So therefore my net loss is 50, sir. My net loss is 50. How 50,000, sir? Please understand, sir. How my net loss is 50,000? Because overall my contract is in loss. So therefore entire 50,000 I need to recognize as an expense immediately. Already 30,000 I am recognizing in the form of difference between contract revenue and contract cost. The balance, that is next year loss 20,000, I need to create a provision. So this is the expected loss for which provision required 20,000. So this is important, sir. This is important. Now therefore tell me now what happens here. The total is 4,10,000. 4,10,000. 4,10,000. You understood the concept? Huh? So you understood the intention of accounting standard 7. So the intention of the standard is you need to see the overall picture also. It is not about current year loss. It is about this one also. Overall what is happening? Overall if your cost is more than the revenue, you will get the total loss, expected loss. And this expected loss total you need to recognize in the current year itself. But in this expected loss, 30,000 is recognized in the form of difference between revenue and cost. And the balance loss for which provision we create in the books, 20,000. So this is the concept. So this I can say calculation of foreseeable loss or expected loss and provision required. So calculation of foreseeable losses and provision required. This is the calculation. Okay, you understood the concept. This is very, very important. You understood. So as per A7, 50,000 has to be recognized as an expense immediately. So this 50,000 expenses already in the form of contract cost 3,90,000, contract revenue 3,60,000, so 30,000, and the balance expected loss we create a provision. So therefore, what is the entry we have written here? Simple, the entry is P&L account debtor to provision for loss. Next year, when actual loss came, this provision will be reversed. Okay, this is first year, sir. Now come to the second year, sir. What we do in the year 2? I will prepare year 2 also. Actually, they have asked P&L account extract for year 2. Extract for year 2, sir. Now in the year 2, sir, what is the contract revenue, sir? The balance revenue. Actually, total 6 lakhs, sir. Total 6 lakhs is the revenue. Second year balance is 40%, sir. Actually, 60% completed in the first year. 2,40,000. And the contract cost is second year is same as estimated, that is 2,60,000. Now you see what is the loss in the current year? 20,000. But that loss has already been recognized in the first year itself, right? We have created a provision. Now the actual loss came. Last year it is an expected loss for which we created a provision. Now this year it is a reality. Actually we got 20,000 loss. So whatever the provision you create, you just reverse it. Don't recognize again net loss, already recognized in the first year itself. So provision for loss will be reversed, that is 20,000. So 2,60,000. 2,60,000. So this is the concept, sir. This is the perfect way of understanding the things. So therefore, whenever any expected loss is there, make sure that the entire expected loss will be there, is recognized as an expense immediately. Expense means P&L account debit side. And apart from this expected loss, in this expected loss, apart from current year loss, because current year loss is automatically recognized, so for the balance expected loss, you create a provision. Next year, you reverse the provision when actual loss is reality. So therefore, this year, what is the entry we have created? So the P&L account debit to provision for loss. Provision for loss. How much? 20,000, 20,000. This is the entry. Because we are expecting a loss, for that we are creating a provision. Next year, actually when the loss came, since already you recognized it, just reverse the provision. So provision for loss. Account debit to P&L account. Last year, whatever the entry we have written, we just reversed it. That's it. This is the concept of expected loss. Okay. Now you see this now what they have done. Of course, they done it in a different manner. I have done according to easy way. This is the way you follow. Okay. I will make available this resource. So accordingly you solve in the exams. And if you see here in the year 1, 60% percentage of completion. So 360 is the revenue to be recognized. Total foreseeable loss. That means total expected loss. 650 is the total cost. 600 is the revenue. Therefore 50 is my total expected loss. Out of this 50 loss, current year loss 30. Therefore expected loss for which provision I create in the current year itself. See here, expected loss to be recognized immediately 20. And year 2, there is a reversal of loss of 20 because the provision has become a reality. So that's why you see the P&L account here. First year contract price 360. If you see my P&L account, so first year 3,60,000 because contract revenue is, sorry, here 60%. 6 lakhs into 60%, 3,60,000. And cost 3,90,000. And provision for loss, this 20. This is important. How I created a provision for loss for 50. 20, because total loss 50, in that current year loss 30, so 20,000 is the expected loss for which provision required. Actually total expected loss 50,000, but out of that 50, 30,000 is already recognized in the current year by way of difference between revenue and cost. So remaining 20,000 is the next year loss for which I created a provision. And next year what happened? You see the revenue cost, reversal of provision for loss we have done. So this is reversal, nothing but provision for loss, we have done the reversal. So this is reversal of provision. Okay, you understood the concept? So this is the question number, illustration number 5, sir. So please be careful, sir, when you are recognizing the revenue of the current year and current year cost, please check overall position also, and overall if there is an expected loss, recognize it immediately. And apart from the current year, for the balance expected loss, you create a provision in the current year itself. Okay, sir. Done, sir. We understood, sir. Okay. Now see the next illustration, sir. Illustration number 6, sir. Illustration number 6. Actually, illustration number 6 is a very good sum, sir. This question is relating to disclosures as per accounting standard 7, sir. Now I want every one of you to check this question if you want to get the complete understanding of disclosures. Okay. Now see this question. A firm of contractors obtained a contract for construction of bridges across river Revati. Okay. So they got a bridge construction contract. The following details are available in the records kept for the year ending 31st March 2011. Rupees was in lakhs. Okay. Total contract price 1000 lakhs. Work certified for the cost incurred 500 lakhs. Work yet not certified 105 lakhs. Estimated further cost to completion 495 lakhs. Progress payment received 400 lakhs. To be received 140 lakhs. The firm seeks your advice and assistance in the presentation of accounts, keeping in view the requirements of AS7 issued by your institute. Institute means ICI here. ICI has issued accounting standard 7. So now what is the requirement of the question? Basically they are asking the presentation of accounts according to AS7. Presentation of accounts means what kind of disclosures you will make as per accounting standard 7. What are the key items you are going to disclose in respect of construction contract? We have seen in disclosures, that is, what is the total revenue to be recognized, what is the method we use to ascertain the revenue, what is the method we use to find out the percentage of completion, and in respect of the contracts which is in work in progress, till now how much cost we have incurred, what is the recognized profits or losses, all these points we have to recognize. Of course, there are some additional points also there. I will tell everything. That's why I said you refer this question so that you will understand all the disclosures relating to AS7. But before that, see, understand certain terminologies here. Very new to us. That is, work certified for the cost incurred, work yet not certified. What is this work certified? See, I am the contractor. Suppose you are the contractee. For you, I am constructing one asset. Now, at the end of the first year, I told you that 50% of the work is completed. How will you believe me? As a customer, see, how will you believe me? I said 50% of the work is incurred, work is done. You make the payment, I asked. Now, as a customer, you have a doubt whether this contractor is telling correct or not. That's why what we do is, the traditional practice is, in respect of the construction project, sir, at the end of the year, an engineer, a qualified engineer, an expert will come and he will verify the construction and he will certify to what extent the work has been completed. So as a contractor, I am incurring the cost on the project. Now, in respect of the cost incurred, how much is certified by the engineer? Now, based on the certification, the customer will make the payment to the contractor. That is the meaning of work certified. So work certified means certified by the engineer and later on customer will make the payment. Work not yet certified doesn't mean that customer will not make the payment. This year it is not certified. Maybe that cost was incurred during the year. Generally, certification will be done at the end of the year. So therefore, work not yet certified, maybe it will be certified in the later period. And when certified, the customer is going to make the payment. So this is the work not yet certified for the cost incurred, 105. See, both the things, whether the work is certified or not certified, sir, cost is already incurred, sir. That is 500 plus 105. Total 605 lakhs cost incurred, sir. So contractor point of view, 605 lakhs cost was already incurred. Please understand that. Okay. Now tell me what kind of presentations you make. The common thing is percentage of completion, because the revenue is recognized based on percentage of completion, because the outcome is estimated reliably here. So percentage of completion you find out, then find out the revenue to be recognized in the current year. Then you see the overall picture of the contract. If there is a expected loss, make sure that you recognize it immediately. And for the balance expected loss, apart from the current year loss, you create a provision. So those things first we will try to find out, sir. So certain basic things first we need to do here. So this is illustration number 6, sir. So first what I will do is I will try to find out percentage of completion, sir. This is the basic thing, sir. When the outcome is estimated reliably, you need to find out percentage of completion to recognize the revenue. So the percentage of completion is, what is the cost incurred so far? 605 lakhs, sir. 500 plus 105. Total cost incurred is 605 lakhs. Divided by 605 plus what is the further cost to incur, sir? 495. So therefore 605 divided by 1100. So it will be 55%, sir. 605 plus 495. So it will be 1100. So 605 divided by 1100, 55% contract finished, sir. Therefore, how much is the revenue I can recognize, sir? So contract revenue to be recognized. Contract revenue to be recognized in current year. How much? Tell me. What is the total contract price? 1000 lakhs into 55%. Therefore, 550 lakhs is the revenue to be recognized in the current year. But overall, I have to check, sir, what is the total foreseeable loss? That means, what is my total expected loss of the contract? In this case, if you check, sir, what is the total price of the contract? 1000 lakhs. What is the total estimated cost? Already incurred 605, to be incurred 405. So total 1100 lakhs, sir. That means the total expected loss is 100 lakhs. So I need to check, sir, what is my total contract revenue? Total contract revenue 1000 lakhs. What is my total contract cost? 1100 lakhs, sir. So therefore, what is the loss I am expecting? What is the loss I am expecting, sir? 100 lakhs. This is my total loss. 100 lakhs. Very, very important, sir. So therefore, A7 says this has to be recognized immediately. Recognized immediately. Immediately I need to recognize, sir, as a expenses. But the point is, if I prepare P&L account, sir, see this. If I prepare P&L account for the current year, what is the contract revenue I will recognize, sir? 550 lakhs. Correct? What is the contract cost I will recognize, sir? Cost incurred in the year 605. What is my current year loss? 55 lakhs. That means out of this expected loss of 100 lakhs, 55 lakhs I am recognizing in the form of the difference between revenue and cost. That is my current year loss. So what is my current year loss from this? So the current year loss from this is 55 lakhs. So therefore, what will be the balance loss? 45 lakhs. For which provision required? So this is the expected loss for which provision required. For which provision required? Provision required. Because accounting standard 7 says whenever the total contract cost exceeds the revenue, overall you need to recognize this is called expected loss. This expected loss has to be recognized immediately. That means 100 lakhs I need to book the net loss. So therefore, in the P&L account, my loss should be how much? Net loss 100. But out of this 100 lakhs, 55 lakhs is the current year loss. So what is the balance expected loss for which provision required? 45 lakhs. Because I need to recognize the total 100 as an expense. Already 55 recognized. So for the balance, I will create a provision. So provision for loss is 45 lakhs. So it will be 650, 650. Now you understand the concept. I think you should now understand, sir. So the total contract revenue 1000 lakhs, total contract cost 1100 lakhs. So total expected loss, this is 100 lakhs. Now what is the current year loss? 55. Out of that, what is the balance loss for which provision required? 45 lakhs. This is the concept, sir. This is the concept. Okay. Okay. So therefore, I got the foreseeable loss. I know the expected this one. All the things I have arrived, sir. Now see, first look at the solution. First they have arrived the foreseeable loss. How much? 100. I also got 100. This has to be recognized. See here, total foreseeable loss to be recognized as an expense. According to A7, when it is probable that total contract cost exceeds contract revenue, total contract cost exceeds total contract revenue, the expected loss should be recognized as an expense immediately. That means total 100 lakhs has to be recognized. And second point, they are showing what is the cost incurred so far. Work in progress means cost incurred till date. That is both cost incurred for work certified, cost incurred for work not certified. That is 100 plus 105, total 605. And that means out of 1100 total estimated cost, 605 is the cost incurred so far. Therefore 55% is the percentage of completion. Now what is the revenue to be recognized in the current year? Proportion of total contract value recognized as revenue is 1000 lakhs, that is contract revenue, into 55%, that is 550 lakhs. This point also we need to show, see, 550 lakhs. So therefore first, total expected loss. Second, what is the cost incurred so far? Third, what is the revenue to be recognized for the current year? Now the most important thing, sir, this is the fourth one. This is the fourth one, sir. I want every one of you to focus here. This is the fourth one, very, very important. Actually, this point is also to be discussed as a part of disclosure, sir. Actually, that point was omitted there in the disclosures, but I am discussing now. See, as per accounting standard 7, sir, as a contractor, I need to show one more item in my financial statements, notes to accounts. That is, what is the gross amount due from customer or due to customer? I need to show gross amount due from customer, gross amount due to customer. See here, in the notes to account, I need to show gross amount due to customer or due from customer, due to or from customer. Sir, generally amount is due from customer. Why we due amount to customer? I will tell you. As a contractor, at the end of the year, I need to check whether any gross amount is due from customer or gross amount due to customer. See, if amount is due to customer, then that will be my liability. As a contractor, that is my liability. If amount is due from customer, that is my asset. That I will recognize as an asset in my balance sheet. Correct? Simple. If amount is receivable from somebody, my asset. If I due amount to them, that is my liability. So same manner, as a contractor, I need to check at the end of the year whether gross amount due to customer from customer. But sir, standard has provided the way to calculate this. See, what they are doing is, you need to compare two things. What is the work I have done? I need to compare with what is the billing I have done. This is called progress billing. Till now, how much billing has been done to the customer? See, as a contractor, I will send the bills to customer to make the payment to me. Now, how much billing has been done? What is the work done? I will compare this. Suppose if the work done is more than the billing I have done, definitely amount is due from customer. So that is my asset. Suppose work done is less than the progressive billing. That means I have done less work, but I made more bills. I mean, I have given more billing to the customer. That is my liability. So at the end of the year, as a contractor, I have to check. Sir, how to find out work done, sir? Simple, sir. Work done is arrived as, first, what is the cost incurred? You check the cost incurred. how much is the cost incurred. Now for this, you add recognized profits. If you recognize any profits in respect of the contract, you add the profits. Or suppose if there are losses, what you have to do is take the cost incurred, from that you minus recognized losses. Then you will get the work done, sir. How much is the work done? Sir, understand, sir. As a contractor, till now, how much I cost incurred? I need to add profits for that. Suppose if it is a loss, I need to minus. Then I will know the work done, how much work I have done till now. The logic is very simple, sir. Suppose, sir, in this case, what is the cost I incurred, sir? 605 lakhs till now, right? And whether I am on the profit side or loss side, sir? Loss side. So therefore, what is my cost incurred? 605. My losses is 100. Therefore, the work done is 505 lakhs. Sir, why you are reducing this loss? This loss, why you are reducing? See, simple, sir. What is loss? When you get a loss, sir, the loss is nothing but when your contract cost is more than contract revenue, that is loss. When your cost is more than revenue, that is loss. That means the extra cost you are incurring is not going to be recovered from the customer. Therefore, how much is the cost you incurred? 605. From that, 100 lakhs will not be recovered because that is in the form of a loss. So therefore, I minus 100 lakhs. Therefore, only 505 lakhs ineffective, the work is done. The work done in terms of the amount spent is only 505. You understood why I reduced the losses? Because loss means cost is more than revenue. Sir, suppose my total cost 1100 lakhs, sir, in this question, but the revenue is 1000 lakhs, sir. Why customer will give me 100 lakhs extra, sir? He will give only 1000 lakhs. He will not give 1100 lakhs. That means this 1100 lakhs, only 1000 lakhs will be recovered. Right? Even though I spent 1100 lakhs, only 1000 lakhs will be recovered from the customer. What about the remaining 100 lakhs? This will be not recovered. So therefore, it is not part of the work done. So therefore, whatever the cost you incurred, from that you need to reduce it. That's why I am reducing the recognized losses, because that is not going to be collected from the customer. Sir. Suppose in this case, 505 lakhs is the work done, sir. What is progress billing, sir? Progress billing is nothing but how much billing has been done to the customer till now. See here, billing means simple. How to find out is payment received till now. How much payment received from the customer plus yet to be received. Add these two things. Yet to be received. Then you will get progress billings. What is the payment received from the customer till now? What is the amount to be received? If you add these two, then you will get how much billing has been done. Simple na? See, how much already received, yet to receive. If you add these two, how much billing has been done? That is called progressive billing. In this case, what is the payment received till now? See the question. Given. Payment received 400. What is the amount yet to be received? 140. So total 540. This is the billing. So therefore, now understand. As a contractor, I done 505 lakhs worth of work. Cost incurred so far 505 lakhs. Sir, cost incurred 605, sir. 605 minus 100 lakhs not to be recovered from the customer. So in effect, 505 lakhs work done. But what is the billing? 540. That means the work done is less than progress billings. So it is what, sir? Tell me. It is a liability, that is amount due to customer. A kind of amount due to customer. How much amount due to customer? The difference, that is 35 lakhs is the amount due to the customer. That means we have done work of 505 lakhs, but we billed 540 lakhs. That means 35 lakhs extra billing has been done to the customer. So it is a kind of amount due to customer. Sir, that means we need to pay the amount of 35 lakhs to the customer. It's our liability. It's kind of a liability to us. So next year we will adjust accordingly. But as of now, at the end of the year, it is a liability. Because till now we have billed 540, sir. But in effect, only as a contractor, only 505 is the work done. Actually, the cost incurred minus recognized losses. So therefore 35 lakhs is the amount due to customer, not amount due from customer. We have done the more billings. So this has to be considered as what? Liability in the balance sheet. Liability in the balance sheet. Suppose, sir, if the work done is greater than progressive billings, then that is amount due from customer. Amount due from customer. Then in that such a situation, what we treat it as, in the books of contractor, we need to treat it as an asset. For example, sir, in this case, imagine, sir, suppose cost incurred 605, sir. See, carefully observe everybody. Cost incurred 605. Suppose there is a recognized profit 100, add it. Then it will be 705. You compare with progressive billings, that is 540. So therefore 705 is the work done. 540 is what? Billing has been done. So 705 minus 540. Therefore still how much amount of billing I can do? 165. So this will be my asset. This is the asset. So this is the amount due from customer, because I have done 705 lakhs work, but billed only 540. Remaining I can bill and I can collect it from the customer. So this is my asset. Now the question is, sir, why you add profits of 100? See, profit means what? In this case, the contract revenue is greater than contract cost. Suppose your contract revenue, for example, 1100 lakhs. Your contract cost is only 1000 lakhs. That means 100 lakhs extra you are going to recover from the customer, right? So you incurred a cost of 1000 lakhs, but you are getting 1100 lakhs. That means this profit also you are going to get from the customer, na? So therefore, that's why cost incurred plus this one I added. So then I got work done. 705 lakhs worth of work I had done. Sir, you incurred only 605, na sir? 605 only I incurred. But from this contract, I am expecting another 100 lakhs as a profit. So therefore 705 lakhs is the amount which I am going to get from the customer. That is called work done. For my work, I am eligible for 705, but I billed only 540. So therefore the difference is 165. That is the amount due from the customer. So guys, you need to understand this concept, sir. So that's why here you see how they have given gross amount due from customer or due to customer. How to find out? First you take contract cost. If it is a profit, add. If it is a loss, minus. Because that amount is not going to be recovered. Compare with the progressive billings. This is called progressive billing. What is progressive billing? How much payment we received and what is the payment yet to be received. Add these two. So in this case, the cost incurred 605. Loss is there, minus 100. This is not going to be recovered. So therefore 505 is the work done. But how much is the billing? Amount received 400, yet to be received 140. So progress billing 540. So 505 versus 540. So I done a work of 505, but I billed 540. Therefore 35 lakhs is the amount due to the customer. This has to be shown as a liability in the balance sheet. So these are the things you need to disclose. Sir, actually this point also is there in the accounting standard 7 disclosure, sir. And we need to disclose it, sir. So that's why I'm discussing this. Carefully observe. And I have provided the notes also. So use this notes also. Very, very important. Now, finally, sir, what relevant disclosures we will make? First, contract revenue. What is the contract revenue to be recognized in the current year? Contract revenue. Current year, how much revenue? 1000 lakhs into how much is the contract finished, sir? 60% contract finished in the first year. 55%. So that's it. 1000 into 55%. That is 550 lakhs. This is the contract revenue to be recognized in first year. Recognized in current year. Okay. Contract expenses incurred in the current year. What is the contract expenses you incurred in the current year? 605. How? 500 plus 105. Work certified cost incurred, work not certified cost incurred. Now what is the recognized profit less recognized losses? Recognized losses we got, no profit. How much? 100 loss. Now progress billings also we need to show. Progress billings means how much amount collected from the customer plus yet to be collected. 400 plus 140, 540. Now what is the retentions also we need to show. This is important, sir. As per A7, retention money also we need to show. This point already we discussed in disclosures. If you want, you can check it, sir. Retention. What is retention means? Billed but not collected from the customer, sir. So in this case, sir, I think we billed 540, in that 140 is not yet collected. So therefore that is called retention money. And what is the gross amount due to customers? 35. is the gross amount due to customers. And apart from this, sir, we need to show what is the method of revenue recognition, percentage of completion method we followed here. And what is the method to determine the percentage of completion? We followed proportionate cost method. Proportionate cost method. You understand, sir? Because as per accounting standard 7, sir, we need to disclose what is the method of revenue recognition. Here the revenue recognition method is percentage completion method. What is the method of determining the percentage of contract completion? We followed based on cost incurred, we ascertain the percentage of completion. How much revenue is recognized in the current year? How much is the cost we recognized? What is the current year profits or losses? How much is the progress billings? What is the retention amount? What is the gross amount due to customers? So all these points we have to disclose as per accounting standard 7, sir. So I think I clarified everything, sir. Even the gross amount due to customer also I have given enough clarity, sir. Okay. Now next illustration number 7, sir. See illustration number 7, sir. On 1st December 2011, sir, Vishwakarma Construction Company Limited undertook a contract to construct a building of 85 lakhs. Okay. On 31st March 2012, the company found that it had already spent 64 lakhs 99,000 on the construction. Okay. Prudent estimate of additional cost for the completion was 32 lakh 1,000. So an additional amount of 32 lakh 1,000 is required to complete the contract. Next, what amount should be recognized in the statement of P&L for the year ending 31st March 2012 as per accounting standard 7? So basically they are asking P&L account, sir. Okay. So they are asking P&L account for the project. So illustration 7, P&L account extract they are asking, sir. P&L account for the year ended 31st March 2012, sir. So see this P&L account, sir. First we need to recognize contract revenue. What is the total contract revenue? 85 lakhs. So out of this 85 lakhs, how much to be recognized? Percentage of completion we need to arrive. So first to find out the percentage of completion. Percentage of completion. What is the cost incurred? 64 lakhs 99,000. Cost incurred so far 64 lakhs 99,000 plus what is the further cost to be incurred? 32 lakhs 1,000 into 100. So 64.99 plus 32.01, total 97 lakhs. So 64.99 divided by 97 lakhs. So 67% contract finished, sir. So therefore, what is the contract revenue to be recognized? Contract revenue to be recognized in current year. What is the contract revenue to be recognized in the current year, sir? Simple, sir. What is the total contract revenue? 85 lakhs. In this 85 lakhs, sir, 67% you recognize in the current year, sir. So 85 lakhs into 67%, that is 56 lakhs 95,000. 56 lakhs 95,000. So 85 lakhs into 67%, that is 56 lakhs 95,000 is the contract revenue to be recognized. So therefore 85 lakhs into 67%, 56 lakhs 95,000 is the contract revenue to be recognized. But you have to be careful, sir. You have to check what is the total foreseeable loss. So for total foreseeable loss, total expected loss you need to see, sir. Now in this case, sir, what is the total contract cost? Total contract cost or total contract revenue 85 lakhs, sir. And what is the total contract cost, sir? Total contract cost. Already incurred 64 lakhs 99,000, sir. To be incurred 32 lakhs 1,000, sir. So total we have incurred a cost of 97 lakhs, sir. That means you tell me, sir, what is the expected loss? Expected loss is 12 lakhs, I think. 85 is my revenue, but overall the cost is 97. Therefore 85 lakhs minus 97. So 12 lakhs is my what? This is my foreseeable loss. Now, according to A7, I need to recognize this immediately. Recognize immediately in the books. I need to recognize it immediately. Okay. So I need to recognize this 12 lakhs immediately. But this 12 lakhs, if you observe the current year loss, what is the current year loss here? See here. What is my current year revenue? 5695. What is my total contract cost of the current year? 64 lakhs 99,000. So therefore, what is my current year? 5695,000 minus 6499,000. So therefore 8 lakh 4,000 is my current year loss, sir. 8 lakhs 4,000 is my current year loss. Sir, how you got current year loss, sir? Simple. Current year revenue minus current year cost. I got current year loss. So therefore out of 12 lakhs, current year loss of 8 lakh 4,000 is already recognized. So what is the balance expected loss? Balance expected loss for which provision required. Balance expected loss for which provision required, because we need to recognize total 12 lakhs in the books. Already 8 lakh 4,000 we are recognizing it. And what is the balance expected loss for which provision required? Simple. 12 lakhs minus 8 lakh 4,000. So 12 lakhs minus 8 lakh 4,000, it will be 3 lakhs 96,000. So 3 lakh 96,000 we need to create a provision, and total loss we need to recognize here is by net loss. The total loss we need to recognize is 12 lakhs. In this 12 lakhs, sir, what is the provision for loss? Provision for loss is, that is 3 lakh 96,000 is the provision we need to create. I think this is the answer for this question, sir. If you want, you can check it, sir. See here. First, they have ascertained the foreseeable loss. That means expected loss from this contract. Overall, this contract is in loss, sir, because the cost incurred 6499, to be incurred 32,1, total 97 lakhs, sir. But the revenue is only 85, sir. So therefore, this contract is in the loss side. That is 12 lakhs is the total expected loss. So as per A7, sir, the amount of 12 lakhs is to be recognized as an expense immediately. And contract work in progress, that is percentage of completion. How much is the percentage of completion, sir? Simple. 64 lakh 99,000 divided by 97 lakh, 67%. Therefore, what is the revenue to be recognized in the current year? Simple. What is the current total revenue? 85. In that 67%, 56 lakhs 95,000. So therefore, the amount of expected loss will be split as under. So what is the expected loss, sir? 12 lakhs. The total expected loss, that is nothing but foreseeable loss or expected loss, 12 lakhs. Now, what is the current year revenue? 56 lakhs 95. What is the current year cost? 64 lakh 99,000. What is the actual loss of current year? 8 lakh 4,000. Therefore, what is the balance expected loss for which provision is required as per para 35? 3 lakh 96,000. That's it. So this is how you need to do the answers. Sir, presentation you can done, sir, but make sure that your answer is having all these things. So you prepare P&L account, you calculate percentage of completion, you write down what is the revenue to be recognized in the current year, you calculate the foreseeable loss, what is the total loss of the contract, foreseeable loss of the contract, okay, and out of that, what is the, out of this foreseeable loss we need to recognize in the books immediately, but out of that current year loss 8 lakh 4,000 we are recognizing. The balance loss we need to create a provision because we need to recognize it also in the current year itself. So that's it, sir. So this is illustration number 7, sir. Okay. Hi students, hope all of you are good. Now we are going to see the scenario based questions in accounting standard 7, sir. First, see question number 9. A construction contractor has a fixed price contract for 9,000 lakhs to build a bridge in 3 years time frame. A summary of the sum of the financial data is as under. So there was a contract, fixed price contract for 9,000 lakhs to build the bridge, sir. The time period of the contract is 3 years, sir. And the data relating to that is given. Amount in lakhs, sir. Year 1, year 2, year 3. So if you see, first initial amount for revenue agreed in contract 9,000 lakhs. Variation in contract is nothing in the first year. and the contract cost incurred up to the reporting date is 2093 lakhs. Estimated profit for the whole contract given 950. Okay, this is what the data of year 1. Year 2, initial amount, agreed amount 9000 lakhs, variation in revenue. See, year 2 there is a variation in revenue. So whenever there is a variation in revenue, it can be included as a part of contract revenue, because it is variation can result in either increase or decrease the scope of the work. So either contract revenue may increase or decrease. Here increase, because plus point they have given. So 200 lakhs we need to add, provided the variation is approved by the customer and it is measured reliably. And clearly given in the question, if you see the below information, the variation in the cost and revenue in year 2 has been approved by the customer. That means this is part of the second year revenue. Okay. And the contract cost incurred up to the reporting date is 6,168. Sir, by the end of the second year, the total cost incurred is 6,168 lakhs. And for the 6,168 lakhs, they have given some additional information. See here, star mark, includes 100 lakhs for standard materials stored at the site to be used in year 3 to complete the work. So what they have done is, in this 6,168 lakhs, they have included 100 lakhs worth of standard materials which are stored at the site to be used in year 3. That means they are not yet utilized. They will be used in year 3. Tell me, sir, without consumption of the material, can it be included as a part of the cost? Answer is no. We have to take material consumed in the construction project. But by the end of the second year, we have included 100 lakhs worth of standard material which is not yet consumed. So therefore 6,168 has to be reduced by 100 lakhs in respect of the materials which are not utilized, which are going to be utilized in the next year. Suppose if they are going to be utilized in the next year, they will be included in the next year cost, not this year cost. Okay. And the whole profit, estimated profit for the whole contract 1,000 lakhs. Now come to third year. Initial amount 9,000, variation which is happened in year 2 200. Don't misunderstand that again in year 3 variation happened. No, you read the question, variation in cost and revenue in year 2 only. So they are just presenting that third year this 200 which is happened in the second year variation, and 8,100, 2 star marks they have given here. What is this? Excludes 100 lakhs for standard material brought forward from year 2. Sir, year 2 they have included materials worth of 100 lakhs, no, sir, but they have not utilized, but they have included. That is one mistake. Second mistake is they have not included in the third year cost incurred, but actually they need to include this 100 lakhs in the third year because that was consumed in third year. But this 8,100 does not include that 100 lakhs. Okay. Because the year in which the materials consumed, in that year you need to consider them as a part of the cost. Okay. So therefore this 8,100 we need to include 100. Then you will get the total cost incurred. So compute year wise amount of revenue. See here what they are asking. Year wise, how much is the revenue, cost, expenses, and contract cost to complete, and profit and loss to be recognized in the statement of P&L. See how much revenue, how much cost you will recognize. Once you know the revenue cost, obviously you will know the profit or loss to be recognized. Okay, this is the question, sir. So 3 years we need to do, sir. Year 1, year 2, year 3. Now tell me how to recognize the revenue and cost. So when the outcome is estimated reliably, percentage of completion method. Here the outcome is estimated reliably. So because every data clearly given, so the outcome is estimated reliably. So when the outcome is estimated reliably, sir, therefore we need to follow percentage of completion method. Percentage of completion method to recognize the revenue. So every year we need to first find out the percentage of completion, and accordingly we need to recognize the revenue. Now let us solve this question, sir. This is problem number 9, sir. Okay. So what we can, this question can be either year wise you can do, or you can do in one table also, so that you can reduce lot of working. So up to reporting date, that means balance sheet date, one column. Previously recognized, one column. Previously recognized, amount to be recognized in current year. Okay, like this I have opened 3 columns. First, contract revenue. Actually first year, I am talking about year 1. Year 1, sir. Now year 1, what is your contract revenue? 9,000 lakhs. Any variation? Nothing. So 9,000 into what is the percentage of completion, I need to find out. So I am leaving some space for 3 years, and then I am starting the working notes. Now the main purpose of this working note is to ascertain the percentage of completion. So year 1, year 2, year 3. So 3 years. Now tell me how to find out percentage of completion, sir. See, the percentage of completion can be ascertained based on the cost incurred, right? The cost incurred divided by total estimated cost into 100. Now, what is the cost incurred by the end of the year? 2093. But what is the total estimated cost? They have not given. At the end of the year, you know how much cost you incurred up to the reporting date, up to the balance sheet date, 2093. What is the estimated cost to complete the contract? At the end of the year, will they have they given, sir? No. Sir. I know all the 3 years data, na, sir. 8,100 is the total cost. I will take it that. No, you cannot. See, understand, sir. You are at the end of the first year. Forgot about year 2 and 3, sir. When you go to year 2, then you will consider year 2 data. Now you are at the end of the year 1. Look at the information given in the question. So they have given cost incurred. But what is the estimated cost to complete the contract at the end of the year? Will they have given? No, they have not given. But they have given estimated profit for the whole contract. Then can I say, I know the profit. Okay, I know the total contract revenue. So from this contract revenue, if I reduce the profit element, definitely the remaining balance is what? That a total estimated cost of the contract. Because this is the whole contract estimated profit. See here, 9,000 lakhs is my revenue, sir. 950 is what I am getting. The whole profit of the contract. So therefore, generally profit, how you are going to get? Contract revenue minus contract cost. Total contract revenue minus total contract cost is equal to profit or loss. But here I know the profit. I know the contract revenue. So the balance figure I can ascertain as a estimated total contract cost. So therefore, see here, what I can do is cost incurred up to the reporting date, or cost incurred. That's it. What is the cost incurred? 2093. And then estimated total cost. Estimated total cost. How you are going to get the estimated total cost? Simple. What is the contract revenue? 9,000. Now from this 9,000, if I reduce my profit for the whole contract 950, so 1000, 8050, can I say this is my estimated total cost? This 8050 is what, sir? Estimated total cost. That means cost incurred plus to be incurred. Together 8050. How you are able to say, sir? Based on the information given in the first year. Based on the information given in the first year, sir, my profit for the contract is 950 lakhs, sir. How I will get 950 lakhs, sir? See, the answer is very simple, sir. Profit is equal to contract revenue minus contract cost. I know the profit. The profit is 950 lakhs. Profit given 950. My contract revenue I know 9,000. So what is the thing I required? Contract cost. So therefore 9,000 minus 950. So it will be 8,050. This is the total estimated cost of the contract. 8,050. Now can I easily ascertain the percentage of completion? Yes. So the percentage of completion is equal to 2093 divided by 8050 into 100. 2093 divided by 8050. So it will be 26%, sir. So therefore 26% contract was finished by the end of the first year. So in this question, the main twist is that only, sir. You need to understand here how to find out the percentage of completion. Even though we don't know the estimated further cost to complete the contract, so by using this, we have know the total profit of the contract. So from the revenue, if I reduce the whole contract profit, then I will know the total estimated cost of the project. Now, cost incurred divided by total estimated total cost of the contract, I got 26%. Now that means what is the revenue to be recognized? 9,000 into 26%. 9,000 into 26%, it is 2,340. That is what I need to recognize. Anything previously recognized? Nothing. So therefore, what is the revenue to be recognized in the first year? 2,340. Okay. Now come to the contract cost. So contract cost, sir. Sir, first year, tell me, sir, what is the cost incurred, sir? 2093. Correct? Or else you can say like this. What is the total estimated construction cost? We have find out 8,050 into how much contract finished? 26%. So 8050 into 26%, that is 2093 lakhs. See here, 2093. Exactly the cost incurred, 2093. And anything previously recognized? Nothing. So 2093 is what, sir? Amount to be recognized in current year. Therefore, 2340 minus 2093. It will be 247, and previously recognized nothing. So 247 is what, sir? Contract profit. So this is profit for the first year, right? First year we got a profit 247. You understand how I have recognized? So the concept is very simple. First you need to find out the percentage of completion. 26% contract finished. So therefore accordingly I recognize. Now come the year 2, sir. Year number 2. And come to year 2 percentage of completion, sir. How much contract was completed? Now tell me, what is the cost incurred by the end of year 2? 6168 they have given, sir. But out of this 6168, sir, 100 lakhs worth of material included, but it is not utilized. Therefore, that cannot be considered as a part of cost incurred. That cannot be considered as a part of cost incurred, sir. So therefore, what I need to do, sir? 6168 minus 100 lakhs I need to do, sir. 6168 minus 100. So it will be 6068, sir. 6068. Important, sir. Why you minus? Because this is not part of current year cost. Now find out the estimated cost of the contract, sir. Simple, sir. We know second year there was a variation. Therefore, my initial agreed amount 9,000. My contract revenue will be 9,200, sir. Because 9,000 is the original, 200 is the variation. So my contract revenue has become 9,200. And my profit of the contract is how much, sir? 1,000 lakhs. So therefore, if I reduce, see here, 9,200 minus 1,000, 8,200 is what, sir? This is the estimated total cost of the contract based on the information available at the end of the second year. So at the end of the second year, there was changes. So first cost incurred, you reduce that 100 lakhs. Second thing is that contract revenue has been changed. 9,000 plus variation 200, 9,200. Plus there was I need to find out the total estimated cost. So if I reduce from revenue the total profit of the contract, I got the estimated cost. Now how to find out the percentage of completion? Very simple. 6,068, that is cost incurred so far, divided by 8,200 into 100. So can you tell me cumulatively how much contract has been finished? 6068 divided by 8,200. So it will be 74%. It will be 74%. That means by the end of the second year, the contract is finished by 74% in total. Of course, till 2 years, 74%. Already 26% is recognized in the first year itself. Therefore, how much revenue I need to recognize? See here, contract revenue 9,200 into 74%. Cumulatively up to second year, so it will be 6,808. Okay, but out of this 6,808, already first year 2,340 recognized. So therefore 6,808 minus 2,340. So 4,468 is what we need to recognize in the current year. Very simple. The total revenue 74% of the total contract revenue 6,808, but already recognized in the first year 2,340. That means out of that 74, 26% already recognized. Na? Only for the remaining balance I am recognizing. And then contract cost. See, the contract cost is also changed. Actually the cost is how much? 8,200, sir. This 8,200, 74% contract finished, sir. 8,200 into 74. So it will be 6,068. Out of this 6,068, first year 2,093 recognized. So therefore 2,093. So it will be 3,975. 3,975. So therefore, can you tell me the profit or loss? 6,808 minus 6,068. So it will be 740. Last year 247. So 740 minus 247, it will be 493. So therefore the second year profit is contract profit. Second year there is a profit and the profit is 493, sir. Total profit till now 740, sir. So 740 cumulatively. Okay. Now come to the last year, sir. What happened in the last year? Last year, what is the cost incurred? Cost incurred 8,100, sir. But you need to understand, sir, this 8,100 does not include materials worth of 100. So, but we are using in year 3. Therefore, it is cost of year 3. So, the total cost incurred is 8,200. And what is the estimated total cost? Contract revenue, same 9,200. What is the contract profit? 1,000. So therefore 8,200 is the total estimated cost. So cost incurred divided by estimated cost, both are same. 8,200 into 100, total 100% contract was finished. 100% contract was finished in the third year. Therefore in the year 3, what we can do is contract revenue, that is 9,200 into 100%. That is 9,200 I will recognize. I mean total cumulatively. Out of this 9,200, 6,808 already we recognized for 2 years. So therefore 9,200 minus 6,808. So 9,200 minus 6,808. So it will be 2,392. 2,392, that is the contract revenue. And the contract cost is 8,200 into 100%. That is 8,200. So already we recognize 6068. So 8200 minus 6068. So it will be 2132. So therefore 1000 is the total profit. Already till last year we recognized 740. So therefore 260, I think 2392 minus 2132. So 260 is the profit. So therefore this is profit. So therefore if you observe, sir, first year profit 247, second year 493, third year 260. The total profit is 1000 lakhs. 1000 lakhs. That is what exactly the scenario is. Because the total contract price 9200, the total contract cost 8200. So overall profit is 1000. By the end of the year, only 1000 we have been allocated. So this is how you present the things so that you will understand it better. So the only understanding here is how to find out the estimated total cost. You need to strike that from total revenue, if I reduce the profit portion, whole contract profit, then I will get the total estimated cost of the contract. That's the only trick, sir. Remaining thing is as it is same. If you want, you can check it, sir. Same presentation is there in the study material and I have not changed it. So if you see, first year 247. So we also got 247. Second year 493. Yes. Third year 260. Yes, 260. And percentage of completion we arrived like this. They are also same. So I have not deviated from the study material, but you make sure that you present in what, see, if you want, you can present year by year also, year 1, year 2, year 3. They will give you absolutely marks. You are not supposed to do like this only, but this is the easiest way because it will not take much time. What is the cumulatively total, how much already we recognized, so what to be recognized in the current year. So that is the concept here. Okay. So that means first year 26 completed, sir. Second year cumulatively it was 74. So 74 minus 26, that means 48% completed, sir. From 74 to 100, that means 26% completed, sir. So if you see, first year 26 they have completed, second year 48%, third year 26%. So this is the pattern, I mean this is the progress they have achieved. Okay. But we have ascertained percentage of completion cumulatively. And cumulatively how much? Already how much we recognized we are minusing, then you are getting the current year figures. So this is question number 9. Now come to question number 10, sir. This kind of questions they are asking frequently, sir. See this question. Icai Limited signed on 1/4/2011 a construction contract for 1 crore 50 lakhs. Okay. That means it is a fixed price contract. The contract price is 1 crore 50 lakhs. Following particulars are extracted in respect of contract for the year ended 31st March 2012. So the following particulars have been arrived, sir. What are those? Materials used 71 lakhs. Labor charges paid 36 lakhs. Higher charges of the plant 10 lakhs. Other contract cost incurred 15 lakhs. Labor charges are 2 lakhs are still outstanding on 31st March 2012. Outstanding labor charges means incurred in the current year but not yet paid. So they will be included. And it is estimated that by spending further 33 lakh 50,000, the work can be completed in all respects. Okay. You are required to compute profit or loss for the year to be taken to P&L account and any provision for foreseeable loss to be recognized as per AS7. So they are asking, compute the profit or loss for the year to be taken to P&L, and also is there any provision required for the expected loss. So when provision is required for expected loss, sir? When the expected loss situation comes. When expected loss situation will come when the total cost of the contract is more than the contract revenue. So if you see here, the contract revenue is 1 crore 50 lakhs. But what is the total contract cost incurred in the current year? These are all. And what is the estimated cost? 33 lakh 50. So therefore, if you want to find out the foreseeable loss, that means the expected loss of the contract, what is the total contract revenue? 1.5 crores. What is the total estimated cost of the contract? That is cost incurred so far plus to be incurred. We know to be incurred 33 lakh 50. Now we need to find out what is the cost incurred so far. So here, what we can do is, see here. So always first try to find out Problem number 10. So cost incurred up to reporting date, that is 31st March 2012. So cost incurred up to 31st March 2012, sir. First, materials. How much is the materials used, sir? 71 lakhs. Take it. This is cost incurred. Next, labor charges. Labor. Paid how much? 36 lakhs. Labor. 36 lakhs paid. And outstanding. Add outstanding. Outstanding means what? Incurred but not paid. So therefore incurred means it should be included as a part of the cost incurred. You have not paid it but incurred. Next, higher charges. $10 lakhs. Next, other cost. 15 lakhs. So these are the cost incurred so far, right? Any other cost? That's it. So 71, 38, 10, 15. It will be 1 crore 34 lakhs. This is the cost incurred so far, right? And what is the further cost to be incurred? At the end of the year, they are estimating what is the further cost to be incurred? 33 lakhs 50,000. Therefore, what is the total estimated cost of the contract? We need to add these two. 134 plus 33.5. It will be 1 crore 67 lakhs 50,000. Correct? 134 lakhs plus 33 lakh 50,000. It will be 1 crore 67 lakhs 50,000. This is the total cost of the contract, sir. Cost incurred plus to be incurred. I added. The total estimated cost is 1 crore 67 lakh 50. And see, what is my total foreseeable loss? That means expected loss. How I am going to get the expected loss, sir? Simple, sir. What is my total contract revenue? In this case, 1 crore 50 lakhs. But what is my total contract cost? Estimated contract cost? 1 crore 67 lakh 50,000. That means overall I am on the loss, sir. Overall I am on the loss. How much loss, sir? 17 lakhs 50,000. So this is my expected loss. And standard says this 17 lakh 50,000 has to be recognized immediately. But so you are required to compute profit or loss for the year to be taken to P&L. We need to compute the profit or loss for the current year and also any provision for foreseeable loss. So what is, see, 17 lakh 50,000 is the expected loss. But out of this 17 lakh 50,000, how much expected loss we need to create a provision? Because this 17 lakh 50,000, you need to reduce the current year profit. So therefore, how to find out current year profit, sir? If you want to find out the current year profit, you need to know the percentage of completion. Because how much revenue to be recognized in the current year, how much cost to be recognized in the current year. See, this is the total loss of the contract. You need to recognize it immediately, 17 lakh 50,000. But this 17 lakh 50,000, we are recognizing in the current year in the form of contract revenue and contract cost. So what is the expected loss for which provision required? So therefore, what we will do is percentage of completion we will find out first. Next, percentage of completion. How to get percentage of completion? What is the cost incurred so far? 1 crore 34 lakhs divided by 1 crore 67 lakh 50,000. So 1 crore 34 lakhs divided by 1 crore 67 lakhs 50,000 into 100. So it will be 80%, sir. So the contract was finished by 80%. Cost incurred divided by total estimated cost. 80% contract finished, sir. 80% means what is the contract revenue to be recognized? Contract revenue to be recognized in current year. How much, sir? What is the total contract price? 1 crore 50 lakhs into 80%, sir. Into 80%. So 1 crore 50 lakhs into 80%. So it will be 1 crore 20 lakhs. So this is the current year revenue to be recognized. 1 crore 20 lakhs. What is the current year cost? 1 crore 34 lakhs. 1 crore 34 lakhs is the current year cost. So 14 lakhs is the current year loss. So if you prepare the contract P&L account, sir, what is my contract revenue? My contract revenue is 1 crore 20 lakhs. What is my contract cost I incurred? So 1 crore 34 lakhs. We calculated na what is the cost incurred during the year. Therefore, what is my current loss? 14 lakhs is the current year loss. Therefore, out of my 17 lakh 50,000, sir, current year loss 14 lakhs, sir. This is recognized by the difference between the contract revenue and contract cost. So therefore, what is the expected loss for which provision is required? Actually total expected loss 17 lakh 50. Out of this 17 lakh 50, 14 lakhs is the current year loss. Actual loss is 14. See, this is total expected loss 17 lakh 50. I told you total expected loss 17 lakh 50. In that the actual loss of the current year 14 lakhs. Therefore, what is the expected loss for the future for which provision required? Expected loss for which provision required? For which provision required? Provision required. Can you tell me 17 lakh 50 minus 14? So 3 lakh 50,000. For this amount provision is required. 3 lakh 50. So therefore, see, by net loss, what is the net loss we are going to recognize? The total loss of the contract. What is the total loss? 17 lakh 50,000. 17 lakh 50,000 is the total loss. And therefore, what is the provision we create for the expected loss? Provision for loss. How much, sir? 3 lakhs 50,000. Correct? 3 lakhs 50,000. Same concept, sir. Nothing great. 3 lakh 50,000. So the answer is 3 lakh 50. They are asking what is the provision for foreseeable loss? 3 lakh 50. Foreseeable loss means expected loss. So expected loss, total expected loss 1 crore 17 lakhs 50. Please understand. Total contract cost minus total contract revenue. Total contract revenue 1.5. Total contract cost 167.50. So there is a total expected loss of 17 lakh 50. This is total foreseeable loss. But understand, this loss we have to recognize 17 lakh 50. In that 14 lakhs we are recognizing in the form of current year loss. And remaining 3 lakh 50 we need to recognize by way of provision. So that's why when you prepare P&L account, see this. Total 17 lakh 50 you are recognizing. But this 17 lakh 50,000 loss, so current year loss, if anyway you are recognizing by way of difference between these two. Only for the remaining balance you create a provision, because that has to be recognized as an expense, because the standard says expected loss has to be recognized immediately as an expenses. So this includes this expected loss of 17 lakh 50, because here cost is more than revenue. How much? Here 14 lakhs plus 3 lakh 50. So total 17 lakh 50. That's it. So this is the concept, sir. This is how you need to solve, sir. Proper systematic way. Okay. Of course, they have solved in different table manner, and you can follow my pattern so that easily you can get through. So no confusion at all. So the answer is what they are asking actually, compute the profit or loss for the year to be taken to P&L. Profit or loss, 17 lakh 50. What is the provision for foreseeable loss? 3 lakh 50. Two questions answers we got it. If you want, you can check it. loss to be provided 3,50,000. I think this is the provision for loss. And total expected loss 17,50,000. Percentage of completion 80%, like that, all the things. What is the cost incurred? 1 crore 34 lakhs. Okay. So you should get an idea, sir. See, how you need to get an idea? See, in this case, I need to recognize revenue and cost. How to recognize revenue? The outcome is estimated reliably. Therefore, percentage of completion. Okay. How to find out percentage of completion? Based on cost incurred. Therefore, how much is the cost incurred so far? I will find out. Plus, what is the estimated further cost? I will take it. So then I will know the total estimated cost. Okay. Now, once I know the cost incurred divided by total estimated cost, I will get the percentage of completion. Once I know the percentage of completion, I know how much revenue to be recognized in the current year. And I know how much cost to be incurred in the current year. Then I will know current year loss, right? And I need to find out the total expected loss. That is total cost of the contract, total contract revenue. What is the total expected loss? 17,50,000. In the 17,50,000, already we are recognizing in the form of current year loss. How much? 14. So the remaining balance is the expected loss for which provision is required. We will create a provision. Okay. So this is how you solve the question, sir. This is how you need to think. Okay. This is problem number 10, sir. Next question, sir. Question number 11, sir. You see, RT Enterprises has entered into a fixed price contract for construction of a tower with its customer. So fixed price contract. Initial tender price was agreed 220 crores. So initially agreed amount 220 crores. At the start of the contract, it is estimated that total cost to be incurred will be 200 crores. Okay. At the end of year 1, this estimate stands revised to 202 crores. Okay. Assume that the construction is expected to be complete in 3 years. Next year 2, the customer has requested for variation in the contract. As a result of that, the total contract value increased by 5 crores. That means because of variation, the contract revenue has to be increased by 5 crores. And cost will be increased by 3 crores. RT has decided to measure the stage of completion on the basis of proportion of contract cost incurred to the total estimated contract cost. Even if he has not specified, now we will measure the contract percentage of completion based on that only, based on the cost incurred. Contract cost incurred at the end of the each year is year 1 52.52 crores, year 2 154.2 crores, including unused materials of 2.5 crores. Unused materials you cannot use, take it as a part of the cost. Year 3 205 crores. Okay. Now you are required to calculate the percentage of completion for each year and also profit to be recognized for each year. Very simple question, sir. So how to find out percentage of completion, you tell me? So percentage of completion based on cost incurred. What is the cost incurred? So for example, year 1, what is the cost incurred up to date? 52.52 crores divided by cost incurred 52.2 plus further cost to be incurred. Actually, if you see, sir, at the end of the first year, we are finding the percentage of completion. Please be careful, guys. Cost incurred so far given 52.52 divided by total estimated cost of the contract. The total estimated cost of the contract is at the end of year 1, this estimate stand revised to 202 crores. Initially, they estimated the total contract cost is 200. Now, at the end of the year 1, they revised the estimation to 202. So, therefore, I will take 202 crores. So, 52.52 divided by 202 crores. So, it will be 26%, sir, into 100. So 26% contract finished at the end of the first year. Agreed or not? Yes. Cost incurred divided by total estimated cost. Total estimated cost they have given directly in the question. Don't take 200. Take at the end of the year what is the position? 202. Take it 202. Now come to year 2. Year 2, what is the cost incurred? Given. See here. Year 2, 154.2 crores. Year 2, the cost incurred at the end of each year is 154.2 crores. 154.2. Now, this 154.2 includes the unused materials which we should not consider as a part of cost. So therefore I am deducting 154.2 minus 2.5 divided by what is the total cost, estimated cost of the contract at the end of the second year. Come to year 2. The total contract value increased by 5 crores. That means revenue increased by 5 crores and cost will increase by 3 crores. Actually 202 at the end of the first year and the cost is increased by 3 crores because of the variation in the second year. So it will be 205 crores. So 202 plus 3 crores because there was a change in the total estimated cost of the contract. So 154.2 minus 2.5 divided by 205. It will be 74%, sir. 74% by the end of the second year. Cumulatively, please understand. First year 26, second year 74. That means 74 minus 26, 48% actually increased in the percentage of completion. Okay. Now come to year 3, sir. Year 3. Year 3, if you look at, sir, the cost incurred 205 crores. And the total estimated cost also same, not changed, right? So 100. So therefore 100% contract was finished. So therefore what is the cost incurred divided by total estimated cost? Now cost incurred first year given 52.2, total estimated cost 202, revised at the end of the first year we have taken. Second year cost incurred 154.2, but this is includes unused materials. Unused materials don't consider as a part of the cost. But sir, here the assumption is this unused materials of 2.5 has been utilized in year 3 and it is included in this 205 crores. This 205. So therefore, we not required to add this 2.5 again. Because see, second year unused materials means you are reducing from the cost. That means it is part of third year cost now. So, but we are no need to add it separately because the assumption is this 205, whatever the cost incurred at the end of the third year for 3 years, it includes that 205. That's it. So percentage of completion is this, sir. 26, 74, 100%. And they're asking one more thing. What is that? Profit to be recognized each year. How much profit you are going to recognize each year? Contract profit or loss, how much you are going to recognize? Simple. We know the percentage of completion. Now based on that, we can recognize how much revenue can be recognized. And what is the cost incurred if you reduce? Then automatically you will get what? Profit or loss. But here if you see overall whether we are in the profit side or loss side, what is the total contract revenue if you finish the contract? If you finish the contract, you are going to get 220. At the end of the first year, the cost is 202 crores. At the end of the second year, the cost is 205 crores. Therefore, here there is no expected loss. Actually, we are on the profit side. But the remaining problems, what we have solved now in the last problem, there is an expected loss. See, while reading the question itself, your mind has to be focused whether in this question there is overall expected loss or expected profit. Here expected profit is there because 220 crores is the revenue, but the cost incurred at the end of the first year, I mean total estimated cost is 202 crores at the end of the first year. At the end of the second year it is 205 crores. So therefore overall we are on the profit side only. Okay. So therefore if I prepare, so I know the percentage of completion. Therefore, how much I need to recognize year 1? So, year 1 P&L account, if I prepare, sir, tell me what is my revenue, contract revenue. 220 crores is the total revenue. In that 26% I need to recognize percentage of completion. 57.2 crores. And what is my contract cost for the second year? For the first year, contract cost I incurred. Given 52.2, 52.52. So the contract revenue for the first year 57.2. That is total revenue into 26%. So 57.2 minus 52.52. So it will be 4.68. What is this? This is my net profit for the first year. Done. So here there is no loss, sir, only profit. Next, come to year 2 P&L. Year 2 profit and loss account, if you prepare, sir, year 2. What is the contract revenue for year 2? Simple, sir. What is the total contract completion by year 2? 74%. 74%. So 74 220 crores is the revenue into 74% minus how much we recognized in the first year, 57.2. So it will be 105.6 crores. 105.6. So that means what happened here is 220 crores into 74%. This is cumulatively totally for the second year. Up to second year, this is the revenue minus how much we recognized in the first year, 57.2. So therefore, we will get amount to be recognized in the second year. Correct only, na sir? See, 74 is the cumulative completion, but in that 26% already recognized. Therefore, 220 crores into 74. 162.8 is the total revenue by year 2. Already 57.2 recognized. So then you will get 105.6. And what is the contract cost incurred for the second year? 154.2, but it includes material cost 2.5 unused. So 154.2 minus 2.5. So it will be 151.7. Right? 151.7 is the total cost, sir. 151.7 minus what is the first year cost incurred? 52.52. So therefore 151.7 minus 52.52. So second year cost incurred is 99.18. So 105.6 minus 99.18. So it will be 6.42 crores. This is net profit for year 2. And when it comes to the last year, that is year 3, P&L account if you prepare for year 3, sir, what is the contract revenue total? 220 crores. But sorry, 220, already 74% we recognized. Now 100%. Already for the first 2 years, how much we recognized, sir? So first year 57.2, second year 105.6. So total 162.8 we recognized, 74%. So therefore 220 minus 162.8. It will be 57.2. This is the revenue to be recognized by third year. And what is the contract cost, sir? Total 205, sir. In this 205 crores, this is for the total. Already first year, how much cost we recognized? 52.52 plus. What is the second year cost we recognized? 99.18. Total 151.7 we recognized. So 205 minus 151.7. So it will be 53.3. So 57.2 minus 53.3, it will be 3.9. This is net profit for third year. It is similar to, I think we have done one question number 9, sir. Same manner, sir. You can do in that format also. Instead of doing year 1, year 2, year 3, you can write up to reporting date, previously recognized, and current year. Like that I have solved one question. Same manner you can do this format. This one you can use. Similar to problem number 9. Like this you can also solve, sir. Nothing wrong, sir. Because ultimately what is required is how much is the revenue to be recognized in the current year, how much is the cost to be recognized in the current year. Cumulatively, if you find out the percentage of completion, you know the total revenue, total cost. From that, what is already recognized, if you reduce, then you will get the profit for the current year. So here 3 years we got a profit, sir. Now first year we got a profit of 4.68. So 4.68. Second year we got a profit of 6.42. Third year we got a profit of 3.9. So first year 57.2 is the contract revenue, correct? Contract cost 52.2, 52.52, okay. We got a profit of 4.68, right? Come to year 2. Year 2, contract revenue 109.3, 225. Sir, I think we have done small mistakes, sir. Small correction, sir. I think the revenue has been increased, na sir? Yes. Year 2, because of the variation, there is an increase in revenue by 5 crores. Okay. I think we have considered in percentage of completion, but we have not considered. Okay. So therefore, here revenue will be not 220, sir. It is 225. Correct? 225 into 74%, 166.5 minus 57.2. So it will be 109.3. So I forgot to add that 5, sir, because there is an increase because of variation. Okay. Cost wise, if you see, I think it will be same, sir. 99.18. See here. Then it will be 109.3 minus 99.18. So it will be 10.12. So 10.12 is the net profit, correct? Yes. And come to the last year, sir. Third year also it will change, sir. Will be 225 minus already how much we recognized will also change. 57.2 minus 109.3. It will be 58.5, sir. Last year 58.5. This one. So 58.5 minus 53.3. So it will be 5.2, sir. Correct. 5.2. So small correction because we are unable to, we omitted to add that 5 in the revenue, which is because of the variation. First year same only, sir. First year 220 only. But by the end of the second year, there is a variation. So which I forgot it, sir. So you add 225, then you will get the answer. Or sir, you can, prepare like the table format, sir. Year 1, year 2, year 3. This will be more easy. Like problem number 9. So different ways of presentation, sir. Ultimately, what is the revenue? How much already you recognized? Minus it. You will get the revenue to be recognized in the current year. Cost is also same. What is the total cost to be recognized? How much already recognized? Then you will get the cost to be recognized. Then you will get contract profit or loss. So that is what exactly they have done. So second year you see 225 crores, 74% cumulatively completed. So what is the total revenue for the second year up to second year minus what is already recognized, like that. Okay. So this is how you can solve this question. This presentation can be varied. So this is problem number 11, sir. Now come to question number 12. On 1st December 2011, sir, GR Constructions Company Limited undertook a contract to construct a building for 45 lakhs. On 31st March 2012, the company found it had already spent 32.5 lakhs on the construction. Additional cost of completion is estimated 15.1. So total estimated cost 47.6, but the revenue is 45. So therefore there is a total foreseeable loss, expected loss of 2.6 crores. This has to be recognized immediately. Out of that, the current year loss, if you reduce, then you will get the expected loss for which provision is required to be created. What should be the amount charged to revenue in the final accounts for the year ending 31st March 2012 as per provisions of A7. So they are asking how much amount should be charged to revenue in the final accounts. That means how much revenue you will recognize in the P&L account, how much expenses and provision you will create in the P&L account. That is what they are asking. Very simple question. So always this is first what we need to do. Problem number 12. First find out percentage of completion. Or else you can find out total foreseeable loss. Total foreseeable loss. Overall, what is the expected loss? Simple. What is the contract total revenue? Total contract revenue how much? 45 lakhs. And what is the total contract cost? Already incurred 32.5 plus to be incurred 15.1. So total 32.5 plus 15.1, 47.6 lakhs. So you observe the difference. So therefore, what is the total estimated loss? 45 minus 47.6. It will be 2.6 lakhs. This is the total foreseeable loss. Overall, the profit, the loss, the contract is in loss. Now, standard says this 2.6 lakhs has to be recognized as an expenses. And now, percentage of completion, if I find out for the current year, what is the cost incurred till the year end? 32.5. What is the total estimated cost? 47.6 into 100. So 32.5 divided by 47.6. So it will be 68.277 I think 28%. 68.28% is the percentage of completion, sir. 68.28. So therefore, what is the current year revenue to be recognized? Suppose if I prepare P&L account for the contract, by contract revenue, the total contract revenue is how much, sir? 45 lakhs. Can I say 40? I think is 45. So see this, 45 lakhs into 68.28%. So 45 into 68.28%. So it will be 30.726. This is the total contract revenue. What is the contract cost for the year? Contract cost is 32.5 you incurred. So therefore, what is the 32.5? Current year loss 1.774, sir. And what is the total foreseeable loss? 2.6 lakhs. So by net loss, what is the total loss of the contract? Total expected loss 2.6 lakhs. 2.6. Right? So therefore 30.726 plus 2.6 minus 32.5. Therefore 0.826. This is, we create a provision for loss. That's it. If you want, you can see, sir, same kind of questions we solved number of times, sir. See here. What is the total expenses to be recognized? Expected loss 2.6. Yes. So this has to be recognized as an expenses immediately. 2.6 lakhs. But this 2.6 lakhs, how we are going to recognize, sir? This is the total expected loss. And in this 2.6 lakhs, what is the current year loss? The current year loss is the difference between current year revenue and cost. This one. So the current year revenue 32.5 minus 30.726. So 1.774 is the current year loss. So therefore the balance is this one, for which we created a provision. But what they have asked in the question, how much amount is charged to revenue? Charged to revenue means how much amount you debit to P&L account. Total expenses incurred 32.5 plus total expected loss. So 32.5 plus expected loss 2.6. So both will become amount expenses. So the total 35.1 we will charge to P&L account as a expenses. Okay. So as per A7, when it is probable that total contract cost exceeds revenue, the expected loss should be recognized as an expense immediately. Here 2.6 lakhs is the expected loss, total expected loss. You need to recognize immediately. That's it. So first he find out what is the cost incurred till date 32.5. What is the cost to be incurred 15.10. So 47.6. He find out the percentage of completion. Then you will know what is the current year revenue to be recognized. 30.73. So total cost of the construction 47.6. Contract price 45. So overall there is a loss of 2.6 expected loss, which has to be recognized as an expenses. But out of this expected loss of 2.6, what is the current year loss that we are recognizing? And the difference is the expected loss for which we create a provision. That's it. So this is very easy question, sir. This is question number 12, sir, which is there in the study material. And sir, if you see the theoretical questions, sir, two questions they have given. First question, it is argued that profit on construction contract should not be recognized until the contract is completed. Please explain whether you believe that this suggestion could improve the quality of financial reporting for long-term construction contracts. Actually, this standard came, and the main object of this standard is construction contracts are long-term projects. But how much revenue you need to recognize every year? That is the main principle of this standard. That means this standard is suggesting proportionate completion method for recognition of revenue. So I will wait till entire contract will be completed, then I will recognize revenue. That is not correct, sir. Because on one hand, every year you are incurring the cost, but there is no corresponding revenue if you are not recognizing. So matching concept will go to toss up, sir. So therefore, this suggestion that you recognize profit so only when the contract is completed is not correct. Okay. So the whatever the treatment which is given by the A7 is absolutely right, sir. Usually construction contracts are long term. The contracts are entered in one accounting period However, the work performed will flow into more than one accounting year. If the profit on the construction contract is not recognized over the construction period, then cost incurred during the earlier years of the contract would be recognized without any corresponding revenue. This will result in losses of the initial years, flowed high profits in future years. Correct? See, suppose 5 years project. You are saying that revenue is recognized only after completion of 5 years. That means first year you only incur cost. That means there is no revenue. So there is a loss. Second year loss, third year loss, fourth year loss, fifth year loss. And fifth year when you complete, then you will get a profit. You recognize only profit, there is no cost. That means there is losses in the initial years during the construction period, and there are profits in the after construction period, which is not correct. So therefore the current treatment under A7 results in matching of revenue associated with the cost as they are recognized during the same period. That's what I said. Cost incurred in the current year, revenue is also be recognized in the current year. So there is a matching of revenues and expenses. Also, the current accounting incorporates the prudence concept for any foreseeable losses. Also, standard says if any time your contract cost is more than revenue, that expected loss you are recognizing immediately. Therefore, A7 results in fair presentation of underlying financial substance of the transaction. Actually very good question, sir. It is explaining, you need to explain the core idea of A7. And next, there is one more question in theory 8. A contractor has entered into a contract with a municipal body for incorporation for construction of flyover. Okay. As per the contract terms, the contractor will receive an additional 2 crores as incentive if the construction of the flyover were to be finished within a period of 2 years from the start of the contract. Sir, this is relating to incentive, contract revenue. See, if you construct the flyover within a period of 2 years, you are going to get an additional amount of 2 crores. The contractor wants to recognize this revenue since in the past he has been also able to meet the similar targets very easily. Explain whether the contractor viewpoint is correct. Sir, if you remember, we have discussed in contract revenue concept when incentive will be recognized as a part of revenue by the contractor. 2 conditions. First, contract must be sufficiently advanced and it is probable that he is going to meet the standards, expected standards. He is going to meet the expectations to recognize, to receive the incentive, and the amount is measured reliably. Now, since in the past I have done these type of contracts very easily, so I will recognize this as a revenue. Not correct, sir, because the contract must be sufficiently advanced. He is in the beginning of the contract, so now he cannot say that incentive I will recognize in the first year itself. No, because the contract has not sufficiently been advanced, and it is probable that he is going to meet the conditions. As of now, we can't say. Previous history is not the basis. Therefore, his argument that previously he has done these type of contracts very easily is not coping up with, not aligned with A7, because A7 says each contract is separate. So therefore, when you want to recognize the incentive of this particular contract, first of all, the contract must reach advanced level, sufficiently advanced stage, and then it should be probable that you are going to meet the standards, then you recognize the incentive. Otherwise, you cannot recognize the incentive. So see here, the contractor's view is not entirely correct considering the variation as a part of contract revenue. There is an argument that he is able to complete the similar contracts within the stipulated time. However, each contracts need to be assessed in isolation with respect to specific challenges associated with the timing and uncertainty of completion. Accordingly, the contractor need to validate the assumptions with respect to the specific contracts. Only after that assessment is done, the incentive of 2 crores may be included within the contract revenue. That means you have to write those 2 points, sir. That is, contract must be sufficiently advanced and probable that conditions will met. That means the conditions which is linked with the incentive will be met. Okay, and measured reliably. These 2 things should be satisfied. That's it. Now we have some MCQs, sir. Test your knowledge. You see this multiple choice questions. XY Limited agrees to construct a building on behalf of its client GH Limited on 1st April 2011. The expected completion time is 3 years. XY incurred a cost of 30 lakhs up to 31st March 2012. It is expected that additional cost of 90 lakhs. Okay. So that means cost incurred 30, additional cost 90, total 120. Contract value is 112. That means 120 minus 112. So there is a total foreseeable loss, expected loss 8 lakhs, which we have to recognize immediately. As at March 2012, XY Limited has billed GH Limited 42 lakhs as per the agreement. Assume that the work is completed to the extent of 75% by the end of year 2. Okay. Now, what is the revenue to be recognized by XY Limited for the year ending 31st March 2012? How much is the revenue to be recognized? That depends upon the percentage of completion. So, if I find out the percentage of completion, very simple. What is the cost incurred till the end of the first year, 31st March 2012? 30 lakhs divided by 30 plus to be incurred 90. So therefore 120. So 30 divided by 120. 30 divided by 120. I think 25% contract finished. Therefore contract revenue to be recognized is revenue 112 lakhs into 25%. So 112 into 25, that is 28 lakhs is the answer. That is the first question answer is 28 lakhs. Okay. What is the total expenses to be recognized in year 1? See, total expenses means, see here, what is the total contract revenue? 112. What is the total contract cost? 120. So therefore, what is the expected loss? 8. So therefore, this has to be recognized as an expenses immediately. And what is the total cost incurred? 30. So therefore, 30 plus 8, total 38 lakhs we need to recognize as a expenses. And what is the revenue to be recognized in year 2? Year 2, what is the revenue, sir? Simple, sir. The total, how much is the contract finished by year 2? 75%. Therefore, see here, 1112 is the total contract revenue into 75% minus how much we recognized in the first year. First year, 28. So therefore, you will get the revenue to be recognized in the second year. Because 1112 is the total revenue, sir. In that 75% is the cumulative completion. That means 84 minus 28. So therefore 56 is the amount to be recognized. So the answers are A, C, C. A, C, C. Okay. Next, come to the second one. Below information relates to question 4 and 5. AV has presented the information for contract number so and so on. Total contract value 370 lakhs. Certified work completed 320 lakhs. Cost incurred to date 360 lakhs. Progress payment received 300. Expected future cost to be incurred 50. Okay. The revenue to be recognized based on the certified work completed. Sir, they are recognizing revenue based on the certified work completed. What is the revenue to be recognized by AV? Certified work 320 A. Correct? Because they are recognizing revenue based on certified work completed. Okay. Next, what is the total expenses to be recognized? Sir, the total expenses to be recognized here is, sir, in this question, sir, they are recognizing revenue based on the certified work completed. Actually, standard says, whenever the outcome is estimated reliably, the revenue and cost is recognized based on percentage of completion. But here they are saying that based on the certified work completed, we are recognizing revenue. So, indicating that, can I assume that the contract is not estimated reliably because they are recognizing based on the certified work completed? So if I assume like that, then what is the cost incurred till now? That will be the total cost of the contract. That is 360 only. Total expenses to be recognized. I think fifth one D is the correct answer. Yes. So fourth one A is the correct answer. That is 320. Sir, here assumption only, sir, because generally we recognize based on percentage of completion, based on cost incurred. If you find out based on cost incurred, sir, cost incurred 360, expected future cost 50. That means 360 divided by 360 plus 50 into 100. So 360 divided by 410. It will be 87.80. This is the percentage of completion. So on 370, if I apply 87.80, so what is the revenue to be recognized? 87.8. So it will be 324.86. But they have recognized 320 because they are recognizing based on certified work completed, not based on the percentage of completion. Percentage of completion based on cost incurred. They are not following that method. They are following based on certified work completed, they are recognizing the revenue. So maybe I think generally for academic purpose, we will use the cost incurred is the base to find out the percentage of completion, and accordingly we will recognize the revenue. But in this case, they are recognizing based on the certified work completed 320. So therefore, you take 320. When it comes to the total expenses, sir, overall if you see, sir, the contract, I think 370 is the cost, sir. 410 is the total, this one, sir. Actually, there is an expected loss of how much, sir? Expected loss of 40. So 360 plus expected loss 40. Total 400 will be the total expenses, sir. But in the question, they have taken only 360, sir. Maybe their intention is that the cost, I mean, the outcome of the contract cannot be estimated reliably. So therefore, they recognized only cost incurred till date as the actual expenses. I don't know what kind of assumptions they have taken here, but they have not given complete information. So don't worry about these MCQs. Don't scratch your head most. Okay. Whatever the answer they have given here, maybe based on certain parameters and certain assumptions they have given it. Okay. Next, come to the sixth one. LP contractors undertake a fixed price contract of 200. The transactions relating to the contract include materials purchased 80, unused materials 30. So minus it, labor charges 60, mission used for 3 years for the contract, original cost of the mission 100, expected useful life 15. Estimated future cost to be incurred to complete 80. What is the loss on the contract to be recognized? Very simple now. First of all, what is the contract 200, sir? Cost incurred 80 minus 30, 50. Material cost, labor 60, mission 100 divided by 15 into 15 years of life. Mission is used for 3 years for this contract. So 20 depreciation. Because 15 years life, 3 years is used for this contract. So total cost is 50 plus 60 plus 20. It will be 130. Right? 130 is the cost incurred so far. And what is the estimated cost to be incurred? 80. So 130 plus 80. It will be 210. This is the total cost of the contract. Total revenue 200. So therefore, what is the expected loss? 10, which we have to recognize immediately. So the answer is 10 lakhs. Very simple compared to the standards of question we have done. So that's it, sir. I think we have solved all the questions relating to AS7, sir.